Welcome everyone to my first video about trading. So I've only been trading for about a year now and I'm still learning, but I thought it would be interesting to take you guys along with me on my journey and maybe you can learn something from it too, or maybe even teach me something. So today we'll be speaking about how I analyze the market as a beginner trader. Okay, so this is my spreadsheet. Um, I keep all my analyzed things in here. So what I do is I analyze the market, then I put it in the spreadsheet so I can always look back to the days and maybe learn from them or see things that I haven't seen yet. So I always start with marking out the previous day or the day that I'm analyzing on the hourly chart, just because it's easier to do than on the daily chart, because sometimes uh, when you go look at the 2 minutes it doesn't match perfectly. Then I always mark out the previous day high and the previous day low. I always use the magnet for this because it's the most accurate. I always I put previous day high and previous day low on the indicator so I know what it is. So when I have that marked out, I'll zoom in, and what I do is I analyze the market. I look what kind of trend it is. I mark out the daily swing low and the daily swing high. So after that, I'll go to the hourly chart. So a candle would be 1 hour. I also mark out the hourly swing high. That's what I'm marking out right here. But I also mark out, of course, the hourly swing low, but in this case it matches with the previous day low. So I always pick the one just above the previous day low, or the one it matches with, just so you can still mark it out, but it's a little bit maybe less accurate, but I always like to mark it out. After that, I'll identify if it's an uptrend or downtrend. So you can see me marking, following the chart. So I'm marking the highs and the lows of the days. And as you can see here, which I'm about to show you, it's making higher lows. So meaning we're in an uptrend. So I'm mostly looking for shorts, just because betting with the market, or well, taking shorts or longs with the market, with the trend, it's usually easier than going against the market. So when you're in an uptrend, you usually want to look more for shorts, for longs. You can go short. I've gone short multiple times, but sometimes it just makes it easier. As you can see, I've also marked out the Asia highs, the London highs, just the sessions, the highs and lows of the Asia, London, and New York sessions. I don't always use this, but it does make it easier. Sometimes it's a strong support or resistance level. I mainly trade support or resistance levels. So you can see here, I'm trying to identify what levels do we have. As you can see here, it touches the previous week high, and it also turns out to be the London high of that day. So you could have looked maybe for a short, you could have marked this out as I'm doing here, could have gone short there. Would have been a nice short. As you can see, it touches the previous week high, finds resistance, pulls back a little bit on the 15-minute, and then drops. So that could have been a nice trade. Unfortunately, I didn't take that. but that's fine. So what I also try to do in the 15-minute is identify another trend, or maybe a bear flag, or uh, things like that. But this day it wasn't really that obvious for trends. So I'll go to the 5-minute once I've analyzed the daily, hourly, and the 15-minute. I analyze on the 5-minute. I don't take entries mostly on the 5 minutes, but as you can see here, I'm looking for trends. I find a nice trend here. So as you can see, it's a beautiful trend, but also bear flag. So you can see the price squeezes, comes in that level, and well, it keeps touching the trend, so it rejects and it tries to stay in that bear flag, but sometimes it just eventually it'll have to break out. So I'll go to the 2-minute. This is usually where I take my trades, the 2 or the 1-minute. As you can see, it consolidates in the bear flag, comes on the lower trend, tries to break it, but doesn't. Eventually it does. As you can see, it pushes back up very hard, but it falls back down instantly. So you can know that sellers are winning in this case. I usually go for a 5R with partials. So it comes around like 3.5R. And well, if you would have taken this, it would have been quite beautiful. So I analyze this, I put the trade on my chart. I put why I would have taken the trade. As you can see, it was a trend break slash bear flag break. But I copy the link. I go back to my uh, spreadsheet and I put it in there. In this case, I forgot, but I also put the complete image of this day of the analyzed market, so you can see all the levels I made or I put on the chart, and you can identify the trend on the daily, the hourly, 5-minute and 15-minute. So I also take a screenshot, or well, in this case, I copy the link. And I also put this in my spreadsheet. So when I look back, I know these were the levels. I would have taken that trade, it would have been beautiful, or that would have been good, or maybe it would have been bad. But as you can see, I have the previous day low. I try to follow this. So the things that I've used as an indicator, I try to X. In this case, I didn't use the Asia, New York, and London highs, so I put a minus there instead of an X. So that's how I analyze the market, and I take my trades from there. And I also have a logbook, but we'll get into that a little later. So I hope you guys learned something, or maybe found it interesting. If not, tell me. Tell me things you also want to learn. And thank you for watching. And I'll see you in the next one.